Hi CA students, let's revise CA Final AFM Security Valuation Chapter 5 Practical Question 5. X Limited just declare a dividend of 14 rupees per share. So D0 equal to 14. Mr. B is planning to purchase the shares of X Limited, anticipating increase in growth rate from 8 to 9%. Since he anticipates the growth to be 9%, we also have to consider 9%, which will continue for 3 years. He also expects that the market price of the share to be 360 after 3 years. So this 360 is after 3 years, which will be the terminal value. They have already given the terminal value. You are required to determine the maximum amount Mr. B should pay for the shares if he requires a rate of return of 13% per annum. So they are asking Mr. B should pay how much for the shares. So we have to find the theoretical market price of the share. That much only we will be paying, and considering the rate of return will be 13%. Going to the solution, first we have to calculate dividend for all the 3 years, keeping 9% as the growth. Then we have to discount it with the 13% expectation rate of return, 13% KE, and we have to take the terminal value, which is 360, which they have already given, so we don't need to find it out separately. Considering applying in the formula, which we have already previously discussed also. So dividend we are getting 15.26, 16.3 and 18.13 for 3 years, considering the 9% growth. Then the discounting with 13%, we are getting a value of 288.56, which will be the maximum amount Mr. B will pay for the shares. Now going to the second requirement, the maximum price Mr. B will be willing to pay for share if he is of the opinion that 9% can be maintained indefinitely and require 13% rate of return per annum. So in the second case, we will not be considering this terminal value, we will be considering eternally a 9% perpetually. So which we can apply same dividend discount model, wherein D1 by KE minus G. We know that D0 is 14, so 14 plus the growth rate 9% will give us 15.26 divided by the required rate of 13% minus the 9%, we are getting 4%. Dividing that 15.26 divided by the 4%, we are getting 381.5. This much will be the amount Mr. V will be paying to pay for the share if the share has 9% growth. Now the third requirement, the price of share at end of 3 years if 9% growth is achieved and assuming other condition remaining same as in 2 above. So the other condition remaining is 13% rate of return and 9% will grow eternally. They are asking price at the end of third year. To find out price at the end of third year, it will be P3. So D3 into 1 plus G divided by KE minus G. This will give us the price at the end of 3 years. So we know D3 using the above formulas, 18.13 and multiplied with the growth rate, which is 9%, divided by again KE minus G, 13 minus 9, we are getting 4%. So 19.76 divided by 4%, we'll get 494. This will be the price at the end of 3 years. Thank you.